Do you want a financially secure future, not just for yourself, but for your loved ones as well? This is Generations of Wealth, the podcast that breaks down the most effective wealth building strategies you can easily apply to your own life. Join investor and international best-selling author Derek Dombeck in exploring practical tips and sound advice on building a profitable business, creating a powerful brand, or getting into the thriving world of real estate investing. This is your chance to create your very own financial roadmap to live your vision, love your life. Let's begin this discussion with your host, Derek Dombeck.
Welcome to the Generations of Wealth podcast. This episode, we are bringing on a very, very exciting topic. It's tax time. Yes, the dreaded IRS. But Marcelino Dodge, our guest today, he is an expert in working with the IRS. And so, as always, I like to bring on guests that have a broad spectrum of different viewpoints as to help the Generations of Wealth audience. And I'm just going to cut to the chase. Marcelino Dodge, thank you so much for being here.
Well, I thank you for just being invited there. It's always always a privilege to be able to sit and share this important topic with ones, because it's one of the areas that actually affect wealth more than we realize and can actually cause ones to lose wealth, is not taking care of their tax issues.
For sure. Marcelino, why don't you give us a little bit of background where you kind of cut your teeth in being an expert with the IRS that you are now?
Well, I've been dealing with the tax universe for over 20 years at this point there. I kind of fell into the business. It's a secondary career for me, but I've just kind of take what I've learned in prior experiences and just wrap that into the tax business. And what I do is I just simply come in and work with people. But yet at the same time, when I bought into a tax business, I actually bought up some clients almost 20 years ago at this point, come to think of it. And then I just always keep to expand my knowledge, because I'm also an enrolled agent with the IRS, which basically means that I'm licensed by the IRS to actually do taxes. And that at the same time allows me to represent taxpayers before the IRS at all levels there. So yes, if you have a tax issue, that's what I'm here for, is to help solve that, which actually, as an enrolled agent, I'm a little bit more flexible when it comes to taxes and like CPAs are. Because you think about it, people always will take a CPA and think, well, they know everything about tax. Well, that's not true. It's just simply not true, because not all CPAs deal with tax or even want to deal with tax. Many of them just do other things like auditing or other type of areas is where they focus. And some do tax. Yes, some do a fabulous job at it, but that's not what all CPAs do. Now, enrolled agents, which there's bunches around the country, thousands and thousands of enrolled agents around the country, their specialty is in the tax realm. And some enrolled agents will do tax preparation for businesses and individuals. Myself, I do taxes for individuals and businesses, but I'm also transitioning to work more in what's called the tax resolution field, because I've been an enrolled agent since 2006 when I passed all the IRS exams, and I continually do education each year, which also allows me to maintain the designation as well, which I'm not necessarily in the classroom, but there's like 50 plus hours that I do just to keep up on various tax issues and to continue to expand my knowledge, and as well as to train my staff as well in that. So what we go in and do is I go in, I help people to prevent tax issues. And then if they have tax issues come up, we start off with a very careful analysis. And one thing I do want to say out there is that you'll hear a lot of advertisements in radio, and I hear them particularly on radio, where they talk about the Fresh Start program. You may have heard those. Well, some of your listeners may have heard about that. There really is no Fresh Start program anymore. It hasn't been around since 2012. That's part of what I've learned about it. I'm like, but there is opportunities to work with the IRS. But what we need to make sure is that you have to qualify for those programs as well.
Okay, so when it comes to qualifying for those, is that actually, let me back up one step. Are you working on the federal level with the federal taxes, or state level, or both?
I work with both.
Okay.
because they're a little bit different animals, because the IRS has specific guidelines that they go by, which apply, of course, nationwide. And then state-wise, each state is its own animal in itself. And some of their regulations are different from the IRS, but usually you got to start with the IRS to kind of see where the state is coming from, because each state basically gets information from the IRS as to what they're going to do, but then they decide what they're going to do on their own. Each state does.
Okay. So I'm just going to pretend like I'm, struggling as a business owner. What's my first step, right? Like I haven't paid my taxes, or I haven't, been able to keep up with my quarterlies, or whatever it is. How do I contact somebody like you, and what do I say, and what can I expect, right?
Well, as a business owner who perhaps, and what you're talking about probably is payroll taxes. 'Cause that's oftentimes what get businesses and business owners into more trouble than anything is payroll taxes. And so what you need to do is contact someone like me, which I'm at cashtracksfinancial.com, where you can basically got to lay it all out. When we start off, when we work with somebody, we get their story, we get their IRS notices, we get authorization to get their IRS transcripts, so we know exactly what's going on. Basically, you got to put your whole life out there.
Mm-hmm.
You got to put out so that, and then find out, okay, well, why weren't these taxes paid? And depending if you're a sole proprietor or a corporation or an LLC, multi-person LLC, even if your business is out of business, you as the owner of it could still be responsible for those taxes overall. It takes a lot of careful organizing to get to it, but yet as we go through the process, what we do is we sit down, we work with you, and we try to come up with a solution. And sometimes that can, depending on financial circumstances, it could end up being some type of payment plan with the IRS, or it could end up being like some type of settlement with the IRS. But it really depends on each individual situation, because there's national standards that the IRS has for certain expenses. And and based on those national standards, even if your actual expense is more than that, they only allow whatever that national standard is in their calculations for qualification. So then that's where we have to come back in and then figure out, okay, do you qualify for perhaps this settlement, or do you have to go into a payment plan? And all that depends on where your whole financial situation is. And sometimes you can negotiate. Sometimes you have to go to appeals with the IRS, but there's different ways that it can be worked out. And certainly what we do is encourage business owners to work on this. Of course, I encourage the business owners, never get behind on your payroll taxes in the first place, because those are what's known as fiduciary taxes, in the sense that you are collecting money on behalf of the IRS. And because you didn't forward it to the IRS, you have a little bit more liability than just like regular income tax. And so they take those pretty seriously, those type of taxes. So you don't want to ever get behind on those. We help
Yes.
with them, but we don't. We people we work with, we make them pay it immediately. That way, those issues never come up.
Yeah, for sure. And I've known multiple business owners that got behind on their payroll tax, and it took a long, long time to resolve. So let's change the scenario to if you had a banner year, but you do owe the IRS $100,000 more than you have, right, at the end of the year or tax time. So what's somebody's options at that point?
Well, if you did happen to have a great year, and you do happen to owe that, and we'll say, going with what you're saying there, that you also did not make estimated tax payments through the year, which is often the mistake which will get ones into trouble. If you're owing like that much, basically, if you're working on it, many times the IRS, you can get into some type of a payment plan with the IRS. Those are available, and they're actually, if under most circumstances, they can be very easily, because they have a it just escaped me. Anyway, they have like an automated collection, not automated collection. It's like a streamlined, there we go, that's what I'm looking for, streamlined process to get involved in a payment plan, which many times they'll just do that. Now, the catch is because there's always requirements to these. You got to be compliant with your taxes, got to have all tax returns filed. And to keep the payment plan current, you also have to keep up with future taxes as well to keep that going. So then if you're in a, like you have a great year, you're making the payments and you're into your next business year, you need to make sure in that year you're keeping up with things like estimated tax payments. That way you keep your installment plan active and in compliance with the IRS. And then you can keep it active there. So that you don't have to get behind and then have additional penalties and interest and those kind of things accumulating. Because even on an installment plan, you're going to have penalties and interest accumulate, but continually make those payments, and you can get it solved. And then if, depending on your situation, if it turns out that later on, maybe something doesn't happen, it collapses because of maybe something, basically because you get out of compliance, sometimes you can get back into it. But yet also circumstances you may qualify to make an offer to it. Just like everything based on person's facts and circumstances.
Yeah, it sounds like there's a lot of variables, which is, I'm assuming, by design by the IRS to somewhat kind of pigeonhole people into you have to play the game their way. Right?
Well, you have to go by their rules, yeah. But if you work within their rules, usually it can work out pretty good, but you got to just work within the rules. Like many people I work with, we have to get in there, see what's going on. Okay, how can we solve this within the guidelines, and to do it, of course, all legally. Cooperation with the IRS is often the biggest mistake people don't make. And let me rephrase that. That is the biggest mistake many people make, is not cooperating, or they ignore the notices that come. And that's usually when people show up to us after they've received a stack of notices. And then they're like, oh, wait a minute, I better do something about this. And so usually we're having to do some emergency things to try to help them out to resolve some issues.
So, I mean, how long is and I shouldn't use the word typical, but how long does a resolution take to solve? Or is that huge fluctuation in time?
Well, depending what we're doing, it could take like 2 years from the time we start working on it to when it gets completed. I mean, I got one right now that I'm been working on for almost a year and a half, and I'm still waiting and we have an agreement with the IRS, but we're waiting for the final notice from them to resolve it. So technically it's still not resolved yet. And this is about a year and a half I've been working on it. So depending on what we're doing, some of them can get solved in 6 months. Some of them can take like 2 years. It just really depends on each situation and what each particular case is, because the department that processes like the offers, minimum wait time, even from you send it in, can be like 12 months before you even hear from them. I mean, you'll get a letter that says, we acknowledge receipt of this, we're processing it, but it's going to take us at least 180 days to go through it.
That's absolutely remarkable. However, I'm assuming when they want something from you, they expect it immediately. Is that correct?
Usually they'll give you like a letter that says, like, we expect a response in 30 days or 60 days or 90 days, depending what the letter is. So yeah, they give you a certain period of time to respond to it. But you can also see one thing that you can do in some instances is they'll give you like a 30-day letter. And then what you can do is, as a representative, I can call in and say, hey, we're going to need like another 60 days to work on this. And many times you just communicate with them that they can extend it for you.
Okay. So that goes back to what you said earlier. Communication is key.
Mm-hmm.
So you don't necessarily deal with audits in your business. You're dealing in after the fact resolutions when payments weren't made. Is that correct?
It's usually when payments weren't made, when tax returns have not been filed for years. We can do audits. We don't do a lot of them. Deal with audits because most of those are correspondence audits, which means you don't actually have an auditor show up at the door, which can happen from time to time still, but just not as often as even 20 years ago do you get an actual physical audit. What happens though is that, yeah, we're dealing with mainly people who are years behind in filing taxes, which sometimes even those who are accumulating wealth, or your listeners, they may be accumulating it, but maybe they haven't filed tax returns for a few years. And then maybe they're getting notices from the IRS for whatever the case may be. That's who we deal a lot with, are those who haven't filed tax returns, who haven't filed, and many times people file or fail to file because they owe money, or they know they're going to owe money, so they don't file their tax returns, which is a huge mistake. Not filing because you owe money.
So what should somebody in that circumstance do? File, and I'll give you an example, because I lead a lot of different people, and I see a lot of different scenarios. Business partners can screw each other up so much by one partner not keeping the books or not doing their portion of the partnership. And if the other partner doesn't have control over those books, tax returns can be either filed incorrectly or need to be amended. So how does a partnership, or even in a marriage, how do you protect yourself when you don't have control? Like, and I'll actually give you an example from my life. We were involved in a deal where we were a minority owner in a mineral quarry. And the person who had the majority ownership of the entity, it was their job to file tax returns and get K-1s issued and everything else. However, unbeknownst to us, this man had some other IRS issues. And so, it was a battle. We could never get K-1s. We could never get things. So how do we protect ourselves in those circumstances?
Well, what you can do, what I always suggest people do in a situation that you're describing where you're waiting for a K-1, but you haven't got it yet, what you can do is always file your tax return without the K-1. If you're getting like close to October 15th, you still don't have if you filed your extension, you're getting close to October 15th, the due date, and you still don't have the K-1, usually I'll suggest file your personal tax return, because what that does is that starts the clock on your tax return. It starts the statute. And then what you can do is periodically check if a K-1, because check your tax record for reporting for income that was reported on your tax record. You can periodically check like every 6 months or whatever, just because you can, and it's so easy to do now online. You can just go to the IRS.gov, set up your online account, and see what income was reported for you. And you can check and see if a K-1 shows up. And if a K-1 shows up, then you can go back and you can amend your return and get it corrected there before the IRS goes in and corrects it, which they will do if they get it when they do their matching. But you start the clock on your tax return when you file. That's usually, it's not something I usually recommend filing, but I don't usually recommend filing unless you have all your documents. But in the case that you're describing, I would suggest, if you're that close to the extension deadline, get it filed. That way you start the clock on your return, and then you can always amend it later, because you're filing an accurate return with the information you have. Especially if you happen to owe money on your other stuff, you want to get that filed. That way you avoid late filing penalties and those kind of deals. And I would even suggest, if you think you're going to owe, you need to at least make an estimated payment by April 15th to avoid things like late payment penalties.
Yeah.
That way you got the money sitting in the hopper there, and then you get it filed. And then if you can go back and amend later once you have that information. Well, if you ever get the information.
Right. Well, and in this particular case, that deal, it didn't go well. We all lost money. There was really never any income. But yeah, that gentleman I say gentleman loosely, he's still, in trying to get a resolution with the IRS. That had nothing to do with our transaction.
Yeah.
But it affects us, right? And I say all this openly because I think people jump into business partnerships, way too loosely across this country, and don't really think through everything. And then, we didn't either. At the time, he was a respected businessman in our area, a high net worth individual. When we entered into this transaction together, and the wheels came off the bus, and we were, we were along for the ride. So,
well, that's why if you're dealing with a partnership, you got to have some type of written agreement. Usually with an LLC, it's an operating agreement, but a partnership agreement, you need to have some type of agreement in place. Now, you don't have to have one to form a partnership. You can just form one. Whatever the state's requirement is to set one up, you can just go and set one up. They're really easy to set up. But
Well, and
so,
that's kind of my point, Marcelino, is
mhm,
in that case, there was an LLC and the operating agreement said that person wasn't in charge of all
mhm,
tax matters.
mhm,
And but what do you do, right? Like us as the minority shareholders in the LLC, we
yeah,
certainly could bring a lawsuit and say, hey, you're not fulfilling your obligations
mhm,
via the operating agreement, but all of that takes time and so on and so
yeah,
forth. So I only bring it up just because it's an interesting topic to
mhm.
see where you are coming from, on the
Yeah,
resolution side. And I
I've
like using my own pain for
yeah.
education purposes,
Well,
apparently.
well, if you're my client in that situation, I would say it's like I mentioned before, let's wait and see if we get it, or make your efforts to get it, document your efforts that you made to get this K-1. And then if we're at April 15th and we know there's other obligations you have to take care of, let's file your tax return. Let's get the clock started on the statute. 'Cause that's the big thing, that if you owe money and you never file a tax return, you haven't started the statute of limitations on your tax return. Because if you haven't filed, there's no statute in place. There's no limitation on it.
Hmm.
And that's the key, is starting that statute, even if you owe money, because there is a time limit the IRS has to collect money.
What is that time limit?
It's 10 years from the assessment date.
Okay.
So if you don't start those dates, then the IRS, I mean, it could be a 15-year-old tax debt, but since you never filed,
Hmm.
the IRS could still come back and collect it from you. Whereas if you'd have filed it and they never didn't collect it in the 10 years, and actually it could go away. And sometimes that does happen. There are
Wow.
cases where tax debt has gone away simply because the statute ran out.
I mean, I don't want to play that Russian roulette, but it's
It
interesting. It's
it is
interesting.
interesting. It does happen. And so that's where we got to be careful. And one thing that we haven't touched on too much is the fact I mentioned about tax compliant, that you have to be compliant to be able to make a settlement with the IRS, or to be able to get into an installment agreement with the IRS. So then the question is, what is tax compliance?
Hmm.
Well, someone comes to me and hasn't filed in 10 years. The question is, do they need to file 10 years of tax returns to be tax compliant? And the answer to that question is no. Would we want to file all 10 years? Maybe. It depends on facts and circumstances of that individual.
Okay.
There could be things that maybe from some of those early years that could affect the years that we need to do for compliance. So that's why we go back and look and see. Many times the answer to that question is no, we don't need to file them. But back to how many years do we need to be in compliance? Well, according to the Internal Revenue Manual, we only need 6 years of tax returns. In fact, I got clients right now that I'm working on, who, when they came, they hadn't filed for 8 years. And there's some adjustments that we're working on, but with them, there's 2 years we're not going to file because we don't need to file. So we're working on 6 years forward for them. And so we're going to get them compliant, and then see where we are. And then if they owe money at the end of that, then we're going to work on a deal with the IRS, or see where we are to get it taken care of. If once we're compliant, we're not, then we're not going to worry about it. It just depends on where they are.
Hmm.
But that's what we do a lot of, is getting people compliant with taxes, and then seeing, because the first step is seeing, okay, are you tax compliant? Which means you have all your tax returns filed. Then once your tax returns are filed, do we owe money? How much do we owe? Do we need to determine a settlement for the IRS, or do we need to do an installment agreement based on your current income level, and so on, based on those national standards that I talked about with the IRS, what they allow and what they don't allow, those kind of areas. So, but tax compliance is always the big thing with many people who have back tax issues, is that they just haven't filed. So we
So,
get it filed so that they start the clock on any money owed.
so at what point do people start getting tax liens against their assets, their homes, get their checking accounts seized, all that stuff?
It usually that I look at that as, it does happen. I will tell you, it does happen. It happens differently than it did 20, 30, 40 years ago. It's not quite as aggressive as it was decades ago, but it still can happen. And it doesn't happen right away. It's not a like a 6-month thing or even a 1-year thing. It's funny. I've been in this business for over 20 years, and I hear people say things like, "Oh, the IRS is going to come do this. The IRS is going to come do that." And I'm sitting here thinking, no, you have to really ignore them a long time. Seriously, you really do have to ignore them a long time before they start doing stuff. Now, usually liens, depending on the amount, they can only do a lien. Like, I'm thinking it's 10,000. It has to be over 10,000 that you owe them before they'll do a lien. And that can still take a year or more of ignoring them before they'll actually do a lien.
Hmm.
And it can take even longer before they'll do a levy, which means they'll just take money out of your checking account. And that's only, and usually they only do that if you ignore them.
Right.
And because they'll do that to get your attention,
Which usually works pretty well.
but does work pretty well. And so those they do happen, and sometimes those liens as well. The thing about liens is that those expire as well.
Yeah. How long is a
Oh,
expiration on that lien?
it's a few years usually. I can't remember the exact number of years. It's a few years, but it always says on the lien, this lien will expire on this date.
Mm-hmm.
Is when
And can they reissue if they reissue or renew it, I should say?
they
prior to its
can renew it.
expiration?
They can one if they don't, one of
It's
those
gone.
things that just goes
Yeah.
away.
Yeah.
That's one of the areas where sometimes people get misinformation, I guess is the way to put it, in the fact that just because you have a tax lien doesn't mean, some people feel that because if you have a tax lien, that means you cannot sell your home.
Right.
Well, the IRS doesn't take over. Like if you have a mortgage on your home, the IRS doesn't become number one lien holder on that home just because they filed a lien on it. And there's forms, actually. There's a way a person can actually sell the home, because there's another form, IRS form, just like everything else. There's a form for it. You can explain to the IRS, this is the position you're in. This is the position our mortgage holder is in. This much will go to our mortgage holder upon sale, and then this much will go to you. So in essence, a person, yes, they can sell their home. It's just, you got to go through a process, but it can be done.
Right.
Even if there's a lien on it, or if you have other property that there's a lien on that you're wanting to sell, the IRS has put a lien on, you can sell it. Of course, the other side is get rid of the lien, pay off the IRS too.
Right. Absolutely. And I've dealt with that in quite a few of my real estate transactions over the years, and also state specific.
Mm-hmm.
And this isn't IRS, but there is, like in Wisconsin, there is a certain amount of your equity that can be protected. So if you're selling your personal residence,
Mm-hmm.
you don't have to clear all liens and judgments. They can sell with clear title, but that's something that anybody that's in the real estate space should find out specifically about your state.
Mm-hmm.
Because that's helped me a couple times when sellers show up at the closing table and there's like $10,000-$15,000 of liens and judgments that they claim they didn't know about, which of course they did, but they never want to
Mm-hmm.
admit. But that's not specific to the IRS at all.
Mm-hmm. Yeah. And that is, and yeah, each state, all I can do is really talk about the IRS here, because everybody's state is a little bit different on that. And
Mhm.
some states may not, and see, sometimes you may not even have a state lien on a property. You may just have an IRS lien on a property, or vice versa when you're selling a property. It can go either way, but yet I know with the IRS, there's ways to work on it to get it done so you can sell the property.
So as a professional in your business, what can people expect for something like this to cost? I mean, you talk about working on somebody's resolution for 2 years. That's I'm assuming a sizable amount of time for your firm or any firm like yours. How does that work?
Well, the way our firm, a taxpayer calls us with their issue, we have a phone conversation initially, which kind of gets some background, kind of let them know how we work, what we do. And then after that phone conversation, and we explain, either me or my assistant here, because she's really good at explaining exactly what we do and how we do it, is what we do is we take usually $1,000 down payment for an analysis. Now, what is this analysis? What this does is that this gives us, first thing, we get an organizer to get your basic information. We get either signed in person, or we get e-signature, because we can do it this way with the IRS. It's a form 2848. We get that signed by the taxpayer, which authorizes us then to look at their IRS transcripts, the wage reports, all of those. And while we're waiting for the IRS to process that, the client then is asked to provide us with a whole list of documents and information regarding financial information so that we can proceed with an analysis to see, okay, this is how much they owe the IRS. This is what their expenses are. What can we do? What do we do? What do we do? Do we do a installment agreement? Do we do an offer and compromise? Which way do we go? What are we going to recommend to the client that we do? Then once we complete that analysis, meet with the client either in person or virtually, because we do it all sorts of ways, whatever works good for the client. Then the total fee for the service can be anywhere from $4,000 to $5,000, but that includes the initial $1,000 that you already paid.
Okay.
And then we go from there. And sometimes these cases get more involved depending on circumstances. Sometimes it can be, and I've done some of these where I have what's known as an innocent spouse who may not be liable for the tax, but we got to file another form to help resolve that issue. And they may not even be liable for any of it. So then we go through a process there to file that form for a spouse that who a husband perhaps filed a tax return, a jointly married but filing joint tax return that showed income and self-employment tax, these kind of areas, or maybe claimed a credit that they're not eligible for, or didn't report all their income, these kind of areas. And the other spouse either had no knowledge or was just told sign here. I mean, and so you can use facts and circumstances to get the wife in this case out of that tax debt, showing that she was innocent of it. And so sometimes those cases come up as well through these analysis as you figure out what exactly happening. Because right now I'm working on one where I think I have a husband who didn't report all his income.
Okay.
And I may have an innocent spouse there that I may be able to file. I don't know exactly yet, but I see that as a possibility coming forward. Now, actually, to go back to something you had asked a little bit earlier, we kind of skipped over, how can a married person protect themselves?
Mm-hmm.
Well, I do this some for individuals, and what that basically can entail is that just because we're married doesn't mean you file a married filing joint tax return. I mean, if you have a spouse, a wife who's concerned about her husband's business, which I actually did have this, a wife who was concerned about what her husband's business was doing, and he was taking his sweet time to get all the stuff together, we'll say, which happens, is reality. She said, well, I'm going to keep my taxes straight. So she did married filing separately for years, make sure her taxes were always straight. So yeah, because a married couple, because one spouse, if they're concerned about one thing, they can keep their taxes straight all the time. They can do married filing separately. Now they may end up paying more in tax as a result, but they're protecting themselves. That's how they can protect themselves through that. Now, interesting fact in the tax law is that if you filed a married filing separate return and then you want to amend or correct to married filing jointly at a later date, you actually can do that. But
how many years back can you go to amend?
There's only usually 3 years you can go back as far as if it's going to get a refund, because you can only because the statute only allows refunds for 3 years. Well, 3 years from the due date. So for example, give it right now, 2020 tax returns, actually, because the due date was extended to May 15th of 2021 in that year. Actually, 2020 returns can still get a refund as long as they're filed by May 15th of this year. So now, let me go back on there. Now, if you did a married filing joint return, you're stuck. You're done. You can't go back and change it after April 15th.
Okay.
So you can only go from separate to joint after the return due date. So I don't see that going either way very often, but I do know that for some people they file separately, and that's okay. That works for them and that protects them. So that's how we can do it. And we've done it for several people because they don't want to, because one spouse doesn't want to be liable for the other spouse's taxes or vice versa, or they just want to make sure their tax obligations are met.
Absolutely. Well, again, this is a topic that I don't really see a whole lot of people discussing or talking about in my circle of influence. And so I really appreciate you coming on and having this conversation with us. You also have your own podcast, which I believe is the Tax Answers Advisor, correct? How often do you push that out, and where can people find that and listen to more?
Well, it's been on the Voice America Network podcast, and I'm actually a little behind on that. I got to get caught up again. I haven't recorded something fresh in a while, but I've been looking at getting back to it. But I do thank you for mentioning it.
Absolutely.
I do want to try to get back into that. I'm trying to figure out how I'm going to do that. But yeah, it's I do like talking about tax, and I'm really pushing this tax resolution because there's like 15 million taxpayers out there who have unfiled tax returns, and the IRS is starting. IRS kind of paused for some years because of the pandemic, but notices are starting to go out. They're opening up the floodgates, and so it's going to be important to start getting those taken care of. Now, one thing in accumulating wealth, like what you do, one of the areas where people get themselves into trouble too is, like, of course, if they sell a property and don't do it properly, reporting that. If they're selling stocks and bonds, because there's areas that come out of there that the 1099-Bs that get issued by the investment companies for that, and sometimes people don't get those filed. There's I don't know how much you deal with cryptocurrency, but that's also a hot topic with the IRS, and they've done a lot of what they call John Doe summonses with Coinbase and those kind of digital wallets to get all that information as well. So don't feel like you can hide it from the IRS, because they will find it eventually, and you're better off getting it filed now than later, because you avoid the hassle, the penalties and interest, and we can help get all of that resolved for you if you do happen to behind. But if you happen to be proactive and get it done with the IRS, they'll work with you. It's amazing. And many times the IRS is easier to deal with than most state revenue departments.
That is what I've been told as well. And I've heard that from other business owners who have had challenges. So I really don't have any goals of being in that scenario.
Yeah.
However, we all need to educate ourselves in the event that something comes up, or in our case, oftentimes we're working with clients that we're maybe trying to buy their real estate or their business, and they're in these challenges. So having somebody like you to be able to turn to, even in those cases, it doesn't have to be us going through it. It can be somebody we're trying to help.
Yes.
So,
Yeah. And I see that's a great part about me being an enrolled agent, is the fact that it's a nationwide license, so that it don't matter what state you're in, I can help you.
perfect.
That's what I love about being an enrolled agent. My license is not state specific. There we go.
And you are, just so everybody knows, you are based out of Colorado, but
Yes.
as you said, you can work anywhere. So
Yeah, I'm based in Colorado, and yes, I do work anywhere. I got 2 offices, one in Lamar, Colorado. It's in the southeast corner, and I'm in Colorado Springs as well. So I actually do have clients all over the nation that I work with in various ways. So, but our main focus here, of course, is tax resolution, and then prevention of having to have tax resolution. We want to help you get both those. Keep you aligned, get you straight, and then keep you straight, and then also help you from never getting off the road there as well.
perfect. So I guess wrapping up here, why don't you let everybody know how they can get a hold of you and find you?
Yeah. Well, okay. Of course, my website is cashtracksfinancial.com. Our direct office number, 719-336-8739 or 719-359-8799. Plus, you can our email there is we call it success, because we want everybody to be successful in getting their tax problems resolved. It's success@cashtracksfinancial.com.
Fantastic. Well, Marcelino, I really, really, really appreciate you coming on, and just, again, this is not a topic that most people embrace, and I know how important it is for all of my listeners to get a broad spectrum of education and knowledge from people that are doing it and doing it right. So thank you once again.
Okay. Thank you so much. Appreciate being on.
Absolutely. So everybody else, please go and like this episode, share it, go and give us rave reviews. Jump on Facebook at the Generations of Wealth Facebook group. Join that. Become part of the Generations of Wealth network. And we will see you on the next episode. Go out and live your vision, love your life. See you next time.
Thank you for joining us on another insightful episode of Generations of Wealth. May your newfound knowledge help you in leveling up your own strategies to get through the many obstacles to your money-making processes and bring you much closer to the financially secure life you truly deserve. Continue filling up your accounts and further polish your financial tactics by listening to more episodes of the podcast at thegenerationsofwealth.com. Because in your wealth building journey, there is no other way to go but up, giving you the chance to finally live your vision, love your life. That's all for now. See you on the next one.